So there will be 20 marks question at question number 2 for you, which will be preparation of final account for any selected public sector entity. It can be the central government itself, which will be the consolidated fund. It can be any other covered entities. It can be district assembly. It can be a ministry. It can be a hospital. It can be educational institution, or it can be any of them. Okay, but whatever be the case, the only thing that is going to be different from them is their revenue. Okay, it's only the revenue that is going to be different. Apart from that one, the expenditure, they are all going to be having a similar form of expenditure, and the classification will always be the same. So we are going to be looking at, if it is for consolidated fund, how do we go about it? If it is for other covered entities, how do we go about it? Okay, so we'll be looking at the central government first, which will always be the consolidated fund. Okay, so if the question is given to you about a consolidated fund, okay, so the question is given to you about a consolidated fund, they can ask you to prepare statement of financial performance. So statement of financial performance, or maybe sometimes cash flow, which we are going to be looking at the cash flow also. So statement of financial performance. Then we have the statement of financial position. Okay. Okay. So they can also ask you about cash flow. Okay. So the statement of financial performance and financial position. We know that financial performance is just like profit or loss account. So it's going to be revenue and expenditure. Okay. It's going to be a revenue and expenditure. If you come to the consolidated fund, how or what are the sources of their revenue? You have to know that, and how it is going to be classified. So the revenue for them will be, if you count to the central government itself, consolidated fund, the revenue that will be going there is the direct tax revenue, the non-tax revenue, and other grants. So their revenue will be classified as the direct tax revenue, which examples will be the payee, the corporate tax, the capital gains tax, the gift tax, or the renter, and those tax, those direct tax, those tax that we can actually calculate using maybe a fixed rate or something like that. So we have the direct tax. We also have the indirect tax. Okay, their revenue will be classified like this. They will not give you direct tax and indirect tax straightforward. They will give you the components of them. So you put them together to have your total direct total direct tax or total indirect tax. Okay, then you also have non-tax revenue. Those revenue that are not from taxation. Example will be penalties, the fines, and all those things. Then we have grants, donations, and maybe gifts. Okay, so that is their revenue. If you count to their expenditure, the expenditure classification, we use the giftedness. Okay, so we use a gift-based classification, where we are going to be having compensation for employees, anything that has to do with something that is given to compensate the employees. Okay, it will be any payment relating to the employees, anything that employees will be taking to the house, anything that will go into the pocket of the employee as a way of rewarding them for their service. Okay, it can be permanent staff, it can also be the casual people, it can be, as soon as you are rewarding the person for his service, that would be that would be for a compensation for employees. So we have compensation for employees. Then you'll be having established pools and non-established. You can also have the casual workers. You can also have the allowance given to the employees. You can also have issues about SNICs. The SNICs payment are relating to employees, so they'll also be classified under the compensation for employees. Then you come to goods and services, things that are relating to administration. Okay, those expenditure that will be incurred for administration purposes. So we have seminars, conferences, you have uh, electricity bill, you have stationaries. There's going to be a lot of them. The state protocol, a 6 month celebration, those things that are relating to administration of the country, those will be classified under goods and services. Then we come to the interest. The interest is straightforward. Those interests that you are paying on what? On debts. So it can be interest on bank overdraft, interest on debts, interest on domestic, uh, international, all the interest that you are going to be paying will be classified as interest. Okay, then you come to the of consumption of fixed capital. Okay, consumption of fixed capital is technically like depreciation. So they will give you assets and they will give you the what? Their consumption pattern. So they will give you their depreciable life and those ones. So you calculate normal depreciation. That is what we call the consumption of fixed capital. So you also come to subsidies. So they will give you, the government is giving a form of what? Subsidies for consumption of what? Particular items. So it can be subsidies on fertilizer. So the government will give the subsidy so that the price of those items can reduce. So they'll make it for you. They'll add the subsidies to the amount. Okay. Then you also have the social benefits. Social benefits are those activities that are going to be undertaken by the government to benefit the majority of the citizens. So you can have school feeding program, you can have the national health insurance, you can also have a medical refund. Okay, medical refund is just like the the NHS, the national health insurance. So we are refunding some of the what, or some of the medical services. Government is paying part of it. So that can also be a social benefit. Uh, the recent thing that happened at the Bato area there, that dam issue, the government will give money to those people. That's also a form of social benefit. So any activity that the government will be undertaking in a form of expenditure to benefit majority of the citizens will be classified as social benefit. Then we also have grants under the central government. The grant over here will be transferred to the district assembly. So the transfer to those statutory what funds are what we call the grants. So the government will transfer money to the district assembly cover fund. Government will transfer money to get fund. Government will transfer money to petroleum fund. Those transfer to those funds are what we call the grants. They are expenditure to what? To the central government. Government is now going to be transferring money to that one. Okay. So we can also have other expenditure. So sometimes the question will give you the other expenditure, or bad debt and those things can be classified as other expenditure, or the those court expenses like uh, judgment debt, all those ones, those expenses that are non-administrative, they are not compensation, they cannot be classified as any of these ones will come to the other expenditure. Okay. For any of the entities that you are going to be preparing the financial statement for, they are all going to be using this one. So identifying the expenditure is not going to be something difficult for you, because whatever is going to happen, the classification of the expenditure will still be the same. But just that the classification of their revenue will be different. So if you count to the covered entities, okay, if you count to the covered entities, like it can be the covered entities. So it can be the district assembly, it can be a hospital, it can be any other, okay, it can be institution, public institution, it can be any of them. Their revenue is either classified, okay, their revenue is either classified as GOG, okay, their revenue, they'll be getting some kind of support from government that will be classified as GOG subvention, or no, I will share the screen with you, so there's no problem with that. Okay. But if you want to take pictures, so there's no problem. Okay. All right. So they are going to be classified as maybe a GOG subvention, or decentralized if it is for the district assemblies, it will either be a decentralized transfer, or sometimes it can be grants. Okay, any of them. Then you can also have, they are going to be, if they are not fully dependent on the government for finance, they are also going to be generating their other revenues. So if you go to hospital, they are going to be doing those inpatient, those are going to be admitted at the hospital, they are going to be paying their bills. So they will have, okay, so they are going to be receiving money from those people. Some people, they will be billing, some people, they will be paying. So those are revenue that they are generating internally. If you go to the district assembly also, they are going to be generating certain revenue internally. Okay, the sound winning, those market tools, those things, all of those things put together will have the IGF. But they are going to be having some amount of money from the government. It can either be classified as DOG subvention, or decentralized transfer, or a grant. Okay, and they can also be having, maybe they can have other grants apart from what the government is giving to them, other grants or donations apart from what the government is giving to them. So any other entity apart from the central government, their revenue are classified as either GOG subvention, or decentralized transfer, or grants, or IGF, or other what grants. That is how you are going to be classifying their revenue. So all those revenue that are generated internally will be put together to have one figure called the IGF. Other money that are received from government will either be called a GOG, or government of Ghana subvention, or a decentralized transfer, or a grant. Okay, but if you come to their expenditure will still be the same as what? As the same thing like the first one. So they will also be paying the employees. They'll also be buying certain items for administrative purposes. They'll also be paying interest on some loans that they have taken. They will be having fixed asset that they have to consume. That is going to be that will last for a particular period of time, and they also have all those ones. So the expenditure classification is still the same. But if you count to revenue and it is not a consolidated fund, the revenue is either the decentralized transfer, grant, or QOG subvention, or IGF, or other grants. They can receive other grants from other people apart from the government. So that is how the revenue will be classified. The expenditure classification is still the same. Okay, so let's pick a question.
Please, sir.
Yes, please.
But I think you'll be giving chart of accounts in the question.
There is all.
We'll give you the various category that you are to classify.
No, they will not give you. African man.
Hello, sir. Please, the expenditure you said is the same, but I think there's a slight difference with respect to the disbursement they give to the district assemblies. It's an expenditure to the central government, but it's a revenue for the covered entities, right?
Yes, please.
But initially you said the expenditures are the same for both.
I'm saying that the expenditure classification are the same. That's what I said.
Okay.
But I've seen a past question.
Then they have given you.
They give you the charts
for this particular the 2019 to 2024 syllabus.
Maybe it's the previous ones. The previous ones they
is the
before the past 5 years.
Hey.
Yes, it's the old one.
Man will give you classification. Even they can even give you the payee tax competition schedule, and they'll come and give you. African man, they want you to suffer.
Because I have one line before me here. They have grant, they have supports, they have fees and charges.
Okay. Those are the time that we are using that. They are using a certain classification, that MTF or something like that. So those ones they will give you how you should classify them. Please. But right now, we are using the gift means classification.
Please, is it possible that since we are doing public sector, can they access to calculate PAYE?
For any question at all,
no. Oh, that one they will do. I'm not sure.
Because it's a tax question.
They'll give you the pay. They'll give you the pay straightforward. Okay, they will give you the figure straightforward. So anything can happen, but that should be a taxation. That should be in principles of tax, or maybe advanced taxation. Yeah, but anything can happen. But to the best of my knowledge, they will give you the figures.
Mm,
Okay, that is not the purpose
so
of that.
that, okay.
All right. All right.
Okay.
Okay. Okay. Let's just use one question to do all these ones and see what we can do. Okay. So let me see. Please don't go and do the fun account first because it will take your time. But if you can speed up, then you can do it first. You can do it as the last question or maybe the fourth question. There is no problem. Okay. But it will take your time. Don't do it as the first question because it is going to take like maybe if care is not taking, it can even take you more than 1 hour to finish. Okay.
Yes, that's what so many people have shared, that it's not advisable you tackle it as number one,
But
maybe in the number 4, yeah,
it will take
or
your time.
5.
Okay.
Yeah.
But people like us that our speed is very good. We can do it as a question number 1. We don't have problem. But you that your speed,
No, we are students, please.
so that your speed, you have to look at one item. Sometimes you can decide not to present the financial statement. You can decide not to add. Okay. You can just bring the items because the workings will take more tick than the work itself. Okay. So let's take the question number 1. Let's take the requirement before we know what to do. Okay. Auntie Patricia, today is your voice back?
Yes, please.
Okay.
Okay, so require. Prepare the following financial statement in accordance with the FM laws of Ghana, the chart of accounts of government, and the relevant accrual basis PSAFs. 1. Statement of financial performance of the Consolidated Fund for the year ended 31st December 2019. B. Statement of financial position of the Consolidated Fund as at the year ended 31st December 2019. C. Statement of cash flow of the Consolidated Fund for the year ended 31st December 2019. D. Notes to accounts.
Okay. So we know what we are going to be preparing, isn't it? We know this is for what? For a consolidated fund, and we know we are going to be doing statement of financial performance, statement of financial position, and maybe statement of cash flow. Okay. So what you do is that you can actually open your accounts down, open them, put the figures there. So you can have the consolidated fund statement of financial performance. Okay, for the year ended. Okay. If you go to the exam, you put the date there. Okay, so we have our, maybe they might be keeping 3 zeros at the top. So you just come here and have revenue. Okay, you know that for consolidated fund, the revenue will either be a direct tax revenue. Please don't make them tax revenue. No, you should be able to differentiate between a direct tax revenue and then the indirect tax revenue. So you have a direct tax, the indirect tax. Okay. Then you also have the non-tax revenue. They will give you a question on the non-tax or the figures on the non-tax revenue too. You count to grants, donations, and what? Gifts, if there is any. Then after that one, you are going to be having total revenue at the down there. Then you count your expenditure here. Okay, you count your expenditure here. Then you have compensation for employees. Okay, you can have compensation for your employees here. Compensation for employees. Then you count to goods and services. Then you count to the interest. You just list the items and move on. They are going to give you questions that will cover almost all of them. So you can just put all of them there If you don't get any of them, you can put dash there and move on. Okay, so we have the interest. We can now have the consumption of face capital. Okay. Then we have our subsidies, if there's any. We have your social benefits. You have your grants, and you have your other expenditure, if any. Okay. So after doing this one, you can just bring your B part here, which will be the statement of financial position. Statement of financial position. Assets, you put it there. You know that you are going to be having assets. So you put the assets there. Then you have your non-current assets. So you have your non-current assets. Then you can look through the question and leave a space like maybe 5 for the non-current asset because you don't know. So let's leave a space like 5. Then you come to your current assets. So under your current assets, you might be having certain items there like inventory, cash and receivables, and those ones too. So we don't know for now. So you also leave a space over there and move on and come to equity and liabilities. Okay. So you have, okay, they are not going to give you equity and liabilities. It should be accumulated fund. Okay. Accumulated fund and liabilities. Okay. So we have our accumulated fund. Accumulated fund. You might be having other fund like contingency fund and other ones, so you can leave a space like that. Count to non-current liabilities. Non-current liabilities, you might be having debt and domestic debt and other debt there, so you can also leave that one. Then you come to your current liabilities. Okay, let's see, we can have our current liabilities here. Okay. So the current liabilities will be that. Okay, so the current liabilities will be having items there. So you can, since you are doing all the 3, please, they cannot ask you like all the 3, at least it will be only 2 statements. So they cannot ask you within, no. Why? You cannot do that one within 30 minutes, 36 minutes, But since we are learning, we are going to be doing all the 3. So you can now come to your statement of cash flow. Okay. So you can now count your statement of cash flow. Statement of cash flow for the year. Then you have your operating activities. Okay. Operating activities. For public sector, we use the direct method. Okay. So what you do is that you have your operating activities. You have your operating activities, and under this one, you have your revenue. You bring your revenue. The revenue should be the cash ones that you have received. So cash revenue. So we have the direct tax, the indirect tax. Then you have the non-tax revenue. You have the non-tax revenue. Then you have grants and other issues. Then you come to your expenditure. Okay, your expenditure, we are going to be looking at only the cash ones. So compensation for employees will also come here. Compensation for employees will also come here. Then you have goods and services. And this will all be the cash one. So you have the interest. You might be paying some interest during the year. You bring it. Consumption of fixed capital will not count because that is a non-cash item. Depreciation is a non-cash item. So you bring your subsidies. You bring your social benefits. Okay. You bring your grants. And you bring your other expenditure. So other expenditure. Then you move on to investing activities. So investing activities will be the acquisition of PPE, loan and advances, and recovery of loan and advances. That will come there. Then you come to your financing activities. Financing activities will be the repayment of debt and the new debt that you have received during the year. So with this one, you can just come to your notes. Okay. The question is asking you to show note to the accounts. So the note to the account, the first one should always be the accounting policies and the.
Is the note the same as workings?
Yes, please. Yes, please. Okay. Okay. So the first note will always be, if they are asking you note to the account, then you dedicate the first one to the accounting policies. Okay. So although there is no order for this one, okay, there is no order that it should always be that one. Okay. But if you look at it, they normally
Please, some of the questions do not ask for notes. So with that one, you can ignore the accounting policies, right?
Yeah, you just ignore.
Mm.
Okay. So the accounting policy will be the financial statements have been prepared in compliance with. So financial statements has been prepared in compliance with. Okay. Then you will say that the PFM Act, okay, and also the IFSAFs. Okay. The accounting policy adopted is what? Is accrual basis. Accrual basis is adopted in preparing this one. You look at your inventory valuation. How do you value your inventory? Okay, you come and talk about it over there. What is the measurement of your asset? Cost measurement of assets. So asset is measured at cost. All assets are measured at cost, except some of them that are measured at maybe fair value. As most of the times, the donated ones, they don't have. We are not paying anything for it, so we value them at the what? At the fair value. Then you also look at the asset consumption pattern, okay, the depreciation pattern of the assets. So you can just put the table that will be given to you in the exam. You can put the table there. How you are depreciating the asset, you can just put it there. There's no problem with that. So from workings 2, you can decide to bring any. There's no format for arranging the workings. Okay, the one that you can do first is the one that you are doing first. Okay, so there's no problem with that. But since we are going to be presenting revenue first, let's do the direct tax revenue first. Okay, so let's do a direct tax revenue first. Okay, so let's go to our question now and pick those items, direct tax revenue items. So let's see if we can get them one by one, or any item that you get, you just bring it to the respective workings. Okay. Okay, let's take this one. What would be the first direct tax item?
Corporate taxes.
Okay, corporate taxes is 240. So we have the corporate taxes, 240,000. Okay, let's go there. The next one is what?
The personal income tax.
Okay, so we have the. Please don't go and read the footnote. Do your these things and leave the footnote. There might be some owings there. After that one, you come and add back. Okay, so we have the income taxes. How much was it?
100,000.
Okay, 100,000. Okay, the next one is.
Okay, so Senior, I also have a suggestion.
Okay.
Can we also open the notes and we open all the ones that we've written down, especially with the SO financial performance bits, so that going through it, if we see them, we just put it there rather than pick maybe direct tax, then you have to scroll through, and maybe when you're done, you come to indirect tax before you scroll through it.
You just be picking. You pick 111. So you just pick that
Okay.
that order. Corporate taxes, personal income taxes. So you just pick the way it is. Then you go and be opening. But if you want to open down, you might not know the number of what items that will come under. So maybe sometimes the space might not be the space might not be enough for you. So what we do is that just pick it like this. We are still on the direct taxes. So we move on. Any item that we are seeing over there, we now classify it as maybe non-tax revenue or whatever. So we just move in that order. We are not going to be scrolling through to get all of them. Okay. So capital gain taxes and sundries, direct or indirect?
Indirect.
No. Capital gain. Capital gain can be a property tax, or it can be a tax that you are paying on the disposal of an item. So capital gain tax is a direct tax. Okay.
Direct?
Yes, please. Capital gain tax. So it can be a property tax. You have disposed of your property, and you are going to be paying tax on it. So property capital gain tax. Okay, or you have disposed your shares, or any item that you have disposed and you are going to be paying tax on it. That is the tax is paid by the owner. The tax is not passed to the customer or the consumer. Okay, if you are disposing an asset, you are going to be paying the tax. You, the seller, is going to be the one to pay the tax, not the buyer. Okay, so that's capital gain tax. You can check it out. Okay, it's not a tax that is going to be transferred to the final consumer. So we have the capital gain tax. How much is that?
40,000.
Okay, 40,000. Okay, let's go to the next one. So we come to the taxes on general goods and services.
Indirect.
Okay, so we can go now and open a space for indirect taxes. Okay, so we can now do, let me see the space over here. So indirect taxes can be here. So we have the indirect taxes. So we can simply name that one VAT. Are you okay? Or if you have a space, you can write all of them there. Tax on general goods and services. How much is that?
This one should go back. 360.
Okay. So we have 360,000. So we have 360,000. Okay. The next item is what? The next one is what? Is
Fees
that will be
on tax.
non-tax revenue. So you can also open another one for non-tax revenue. Okay, so non-tax revenue. So you have the fines and penalties. Okay, how much is it?
$160.
Okay, 160. 160. The next one is what?
Investment income.
Investment income. Well, how do we classify that one?
Custom duties.
No, the investment income, it will be a non-tax revenue. Okay. So how much is the investment income?
40,000.
40,000. Okay. Then we have custom what?
Duties.
Okay. This will be,
Non-tax.
are you sure?
Indirect tax.
Okay. That is a tax paid by the customer of the goods that you are bringing in. So that is how much?
360, I think.
That is
500,000.
555.
we need to for the consolidated fund, then you need to now go and learn or memorize the types of the taxes. That's what I also did when I was writing, because some of the things you think that you're on top and you're not on top. So You just have to put them in your mind. Okay. But what you have to know is that whenever the tax is being passed to the final consumer or the final customer, that will be a tax that will be classified as indirect tax. Okay. So let's come to school feeding program grants. School feeding.
Social benefits.
No, you have to know whether this
Grant.
one, you have to know
Oh, the
whether
grant.
it is the
Or
it is the
the
government that is
expenditure.
receiving. No,
Social
you have to know whether it is the government that is receiving or not. Okay, this one we don't have debit and credit. Okay, you don't have debit and credit. Okay, come and check here. Okay, you have to come here again. School feeding what?
program.
So we have one. We are going to be having one, and we have one also. Both of them cannot be expense, isn't it? Okay, so
And
if
that one will be done.
that will be a donation or grant receiving from other parties. But if it should be debit or credit, you will know whether this is an expense or this is what this is an income. But since they will give you the two, if it is an expenditure, they will indicate that one to be an expenditure, or they will make it not to be an expenditure. So the one over here, which is the school feeding program, will be the expenditure, and the one that is a grant, we are receiving the school feeding program, we are receiving a grant from maybe a donor party or something, but we are going to be transferring this amount towards to the various schools for the program. So we can now have maybe grants, donations, okay, donations, and gifts, if any. Okay. Okay. So we have the school feeding. So school feeding program grants. How much is it?
$100,000.
Okay. 100,000.
It's grants, donation, and what the last one? I can't see well.
Gift.
Oh, okay, thank you.
All right. So we have capital project grant what?
Received.
Okay, that will also form part of the grants. Capital. So you have the capital project grants. How much is it?
150.
150.
150.
Okay. That will also come to the next one, which is other
Bilateral grants.
Okay. So other bilateral grants. How much is it?
50,000.
50,000. Okay. Okay. Let's go to the next item there. That will be the next one is what? Communication service what?
Tax.
Okay. So
Indirect.
direct or indirect?
Indirect.
Indirect. This is a tax paid by the person who is using the credit to call the what. So we have the communication service taxes. How much is it?
200,000.
Okay, 200,000. Then we now move on to the royalties. Royalties will be what?
Indirect
Non-tax.
tax.
Non-tax, not indirect. It is non-tax revenue. Okay. How much is it?
50,000.
30.
80.
Okay. Let's do, okay. Establish post. You see, one thing that you have to know is that they will, whenever whenever item is given to you, the following item will belong to the same what? The possibility that the following item will belong to the same classification is very high. Okay, so sometimes you don't know, you see established post, you know that will be compensation for employees. So another one will follow. It is likely that it will still be compensation for employees. Okay, so that is also sometimes you don't know how to classify. Mostly all the expenses will be for goods and services than any other ones. So if you don't know how you can classify it, you can just put it in the goods and services and move on. Nobody is coming to ask you. Okay, so we have compensation for employees. Okay, so we have the established. Okay, how much is it?
405,000.
Okay, 405,000. Can we pick the following one also and mention
Yeah,
it?
total labor.
Okay, so that will still be compensation for employees. So we have the casual labor. That will be how much?
120.
120.
Staff allowance.
Okay, so we have the staff allowance too. That will still be compensation for employees. How much is that?
Please let's go back and check.
Okay.
75.
Sometimes you have to memorize
75.
the figures. Memorize the figures. Okay, it will help.
Okay,
So we have
75.
75,000. Okay. So this is going to take your time, I bet you. No matter how fast you are, it's going to take your time. So, okay, maybe this place, will this place be, let's bring the goods and services here. So we have goods and services. Okay. So the goods and services, we can now have our, okay. So the next item is what? Travel and what?
Transport.
Okay. Travel and transport. So we have, that will be goods and services, isn't it?
Yes.
Okay, that will be 140,000. So travel and transport. Okay, that is 140,000. Okay, let's go to the
Repairs and maintenance.
okay, repairs and maintenance. Repairs and maintenance. Okay,
100,000.
100,000. Okay, what again?
Social security.
It will be under what?
Compensation.
Okay,
Compensation.
compensation for employees. So 13% social security.
52,000.
13%
336.
SSF. That will be
52,000.
52,000. Okay. What again?
And there's gratuity.
Gratuity will also be for employees.
Compensation.
Okay. End of year compensation or something. How much is it?
256.
25.
336.
336.
Okay. 25, 336.
No. 336.
100.
336,000.
Okay. 336,000. Okay. So let's move on there. Okay. What again? State what?
Protocol.
It will be
Goods and services.
goods and
Goods
services.
and services.
Okay.
No, 360. Independent.
State protocol. That is how much?
360.
360. Okay. Let's now move on.
Independence celebration.
Goods and services, isn't it?
Yes.
Yes.
That is also for administrative purposes. Independence Day. Celebration. How much is it?
100,000.
100,000.
Okay. So let's move on to inventory.
Inventory purchase.
Yes.
Okay. So the inventory.
Stationery.
Okay. So that you just bring the total amount over here. Maybe there might be a closing balance. Then you come and bring the closing balance here. How much is the inventory purchase?
310.
Okay. 310. Okay. So let's move on to the next one.
Seminar conferences.
Okay. That will also be
Goods and services.
goods and services. So it is likely that you'll be seeing the same expenses for all of them, but just that state protocol and independence celebration, they are mostly for the consolidated fund. But the travel and transport, repairs and maintenance can be for any of the entities. So the seminars and the conferences, how much is it?
60,000.
60.
Please, can you throw more light on what is state protocol?
Please, can someone help? I haven't been to the
I think protocols are expenses on those state celebrations. For instance, when a former first lady died, the state will take charge of the whole funeral or the burial services. So the expenditure on that is one of the reasons. It's an example of.
Yeah, okay. Thank you.
okay. Seminar and conferences,
Yes, 60,000.
60,000. Okay. So
Rent. Rent.
rent will be what?
100,000.
Rent will be what?
General,
Rent.
goods and
Goods
services.
and services.
Okay. How much is that?
200,000.
200,000.
100,000. Okay. Then
Probation.
probation
Compensation.
will be what?
Compensation.
Okay. It is the employees that will be on probation. So you'll be paying those people that amount. So probation will be how much is it?
50,000.
50,000. Okay. Up to now, we haven't seen any item that will go to the statement of cash flow as an item straightforward. Okay.
PP.
PP will be the one that we'll be using for depreciation.
Consumption of physical.
Okay. Infrastructure completed, that will also be the we also take that one to the statement of financial position, accumulated depreciation, PP, accumulated depreciation, infrastructure completed, purchase of what? PPs. So that will now go to that will now go to cash flow statements. So investing activities, we have acquisition of PPs. How much is that?
Acquisition of
Purchase of PPs.
Sir, please, there is accumulated depreciation.
It will not affect. This is cash flow. This is the amount that we have spent on PP for this.
No, I'm talking about the performance, the statement of performance.
But we are going to do consumption for fixed capital. That one will be after we are done with the footnotes. Okay.
Okay.
Cash flow, the cash flow that you are going to be doing here is not like the cash flow that you do in financial reporting that you have to look for the acquisition yourself. No, this one will give you the acquisition straightforward. Okay. And that is the cash that we have spent on the PP for this particular year under consideration. And that is how much? 202,000. Okay. So you have 202,000. Okay, as an outflow. With that particular information, you can now go and let's go and have consumption of fixed capital. So we have consumption of, okay, this will be okay. So we have consumption of fixed capital. Okay. Please, how do we do it? Should I prepare the asset schedule for you, or we should do it one by one?
You want the simple and easier one.
Okay, so let's use the asset schedule.
the lazy man approach.
Okay, let's have the schedule.
On the lazy man's approach.
We have the PP schedule. Okay. The PP schedule. Okay, so we have the PP schedule. You bring the assets one by one. Okay, so you bring your PP here, then you bring your infrastructure here. Okay, you can leave the total column. There is no problem with that because we show them one by one. Okay, so you start with the opening balance. So this will be the cost. So you start with the opening balance. Okay, balance brought down. Let's go to the statement of financial position to pick those balances. Okay, so those things that have been given to you as PP plans at cost. So those are the opening balances. Okay, so we have the cost of 600,000 for PPE. 600,000 for PP. Infrastructure is what?
800,000.
Okay, so that would be
800,000.
800,000.
100,000.
Okay, we have acquisitions. Okay, the acquisition of PP is what? The addition is what? 202,000.
202.
Okay.
202,000.
Okay. Let's go and see whether there is an acquisition of infrastructure too, whether any infrastructure has been completed. Okay, we still have construction of what?
Infrastructure.
Okay, so this will be dim addition. Okay, construction of infrastructure. So that will also be the cost that have been incurred for this year. So that will be How much is that?
300.
300.
So you also count this place as investing activity. You have the construction of infrastructure. Okay. So 300,000. That will be here. And then you have the 300,000 here. Okay. Okay. So we have the infrastructure work in what?
Progress.
Okay. This work in progress, we don't know what type of infrastructure it is, but since it is an infrastructure, it's supposed to be what? A non-current asset. Okay. So you can go to your this one and have. Okay. So I leave a space like this. Oh no. Okay. I'll come and do what I can see. Okay. So you can have the infrastructure here. Infrastructure here. Then you would attach work in progress to it. This one, you don't have to do any workings. What is the amount there?
$550.
Okay.
550,000.
Okay. So that is the only infrastructure that has been completed for this year is the 300,000. So we assume that the one that is work in progress has been there since. So it's not something that we have started this year. Okay. This is for completed infrastructure that is completed. So this is the one that we are going to be depreciating. Let's bring the. Okay. Let's now move on to. Okay. Let's be moving. Infrastructure work in progress. We have done that. District Assembly Common Fund.
It will be an expenditure.
Okay. Expenditure under the.
Grant.
Okay. Expenditure under grants. So let's go and do the expenditure under grants. Okay. So for you to be able to differentiate it, you can say grant expenditure. Okay. So let's come there. We have the DECF. How much is it? $100,000. Okay. Please do all this before you go to the footnotes. Okay.
Yes, I have a question. The District Assembly Common Fund, is it not the classification? Wouldn't it be better under decentralized? Is it decentralized transfer?
Statutory
Yeah.
payments.
Please, you didn't ask your question. No?
I said the District Assembly Common Fund.
Okay.
Won't the classification be better under this decentralized transfer and not where you are putting it as grant?
Decentralized transfer under what? Under expenditure or under which one?
Hello?
Yeah, I'm with you. Decentralized transfer under expenditure or under what? Can you hear me?
I'm asking whether the centralized transfer classification for District Assembly Common Fund, is it not better than the grant
Under
where you
what?
are putting it?
The decentralized transfer under what? Expenditure or income?
Expenditure.
Have you seen decentralized transfer as part of the give me classification?
I was thinking so.
Is there any classification under as decentralized transfer under
Give me.
give me classification?
I was thinking so. If not, then we can go on. Thank you.
For me, I haven't seen any before. Do you have anyone who has seen decentralized transfer under expenditure classification of giftness? Okay. There is no classification as decentralized fund or transfer under giftness classification. All transfers made to the district assemblies are being classified for the central government as grants. They are classified as a title grant.
Okay.
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 All right, thank you.
Senior, I think you have to explain to her that we are doing a central government and not local government. So the centralized transfer comes under local government.
Even
So that
if
she know that.
even if it is local government, the decentralized transfer, which is grant, will be under revenue. It's the same as grant, which will be under revenue. Okay.
Yes,
It will
maybe
not.
she doesn't understand it that way. So if you explain to her that
Okay.
way, I think it will
But
be better.
her point is not about revenue. Her point is about expenditure, and we don't have any
Okay, all right.
classification like that under all those transfer are classified as grants. Okay. Unless you want to
Okay.
create your own classification for the giftness.
No.
All right. Don't worry, we'll be very fine. Okay. The other one is what? Other statutory words
Funds.
of funds. So it can be petroleum fund or any other one. That is also going to be classified as
Non-revenue.
okay. So other statutory funds will also be classified as the okay. How much is that?
$40,000.
40.
Yeah.
Okay. The next one is what?
Get fund.
Gate fund will also be a transfer. It will also be a grant. Okay. So you have the gate fund. Okay. The gate fund. Gate fund. Okay. How much is it?
80.
80,000. Okay. Then we have the
Medical fund.
medical refund. Okay.
Medical refund.
Okay. Medical refund should be treated as like how you'll be treating the National Health Insurance, the NHS. So it will be government paying part of those ones. So that will be classified as a social benefit. Okay. So whenever you see medical refund, you should classify it as social benefit. Let's create a space for social benefits. My body is even exhausted. So let me bring the social benefits here. Okay, so we have medical refund. How much is it?
180,000.
Okay, 180,000. Okay, and we have what?
Free senior high school.
school. What will be that?
Grants.
Social benefit.
Free senior high is what?
Social benefits. Social programs.
Free senior high is a social intervention program. So we have the free senior high. Will be this senior high. Free senior high. Free senior high. you can see that we have spent almost an hour already. No matter how fast we are, you cannot. Within 30
Please, can it be loaded like this under exam condition?
It can be. Those people, they don't examine their questions before bringing them. So it can be. So free senior high
But
is
why would they bring a long question like that?
oh,
We are just supposed to test students' understanding.
they can
So why
bring
would
it,
they
but
bring
they will not bring
plenty
the
things and they expect you to do it within 40 minutes? How?
they can bring it, but they will not add maybe the statement of financial position to it. Okay. Okay. They can
So this is your question.
Excuse me.
yeah. So I just want to use this one
Senior,
to
please.
yeah.
Can I ask a question, please?
No, please.
Oh, sorry.
Now you are giving me options. Just go ahead with your question. If you are giving me, can I ask a question? I have the option to say yes or no. And if I say no, you'll be
Oh, okay.
disappointed. Okay.
I wanted to find out why the medical refund is under social benefits and not goods and services.
Not the medical refund is not something that is given for administrative purposes. It's given for the citizens as a whole. Okay. So we they have been uh okay, maybe the government has done maybe screening and those things for people, and the people have paid some amount of it. So the government is now refunding those people. So it's not something that we have to do to keep the administration running. No, it's not part of those administrative issues. It's just like an intervention that government will bring up that okay, we are refunding maybe 30% or 70% of all the medical bills that have been paid by the citizens. It's an intervention, and it's not something that has to keep the government office running or the administration running. So it's not administrative expense.
So, so can we say this is just like the NHIS
Yeah. That's why I said
sort
that
of?
you should just take it like maybe the national health insurance that intervention that they are bringing. Okay.
Okay, all right, thank
But
you.
senior, so is it also open to interpretation? Because are they looking at the workings to see that maybe grants is supposed to be this amount, or it's open to interpretation how you interpret? So, for instance, as you said, medical refund. Someone may think it's an administrative, depending on how the person sees it, or someone may also even feel it's maybe your staff has gone to the hospital and you are refunding whatever money that is paid.
Okay.
Like how we do it at work.
The if that interpretation should be if you have to think about the employees compensation, then they have to make it maybe more open for you so that you cannot maybe they can say medical refund to employees. Okay. So they will make it
Okay.
be specific for you. Probation is sent to compensation for employees. Okay, someone is asking for. We send a probation to compensation for employees. So some people will be on probation and we'll be paying them. So probation is sent to compensation for employees. Please, can we? So this one, I just use this question to demonstrate. Maybe we might not solve additional questions. So it's not anything. It is an easy side that you can get marks, but just at a time. Okay, just at a time. School feeding program.
Intervention.
Social benefit.
Okay, but what will happen is that if you classify this, you see that the grant received was classified as a grant, isn't it?
Yes.
Okay, so if you classify the school feeding program as a grant, it's just that you are going to the classification is in line with how you are classifying the what the grant received, but it's a social intervention, it's a social benefit. So let's put it under the social benefit. So we have the school feeding program. So school feeding program. Okay. And I'm already tired, so I can imagine. Okay. So let's keep the figure there, but it is wrong. We just have to do 50 marks. Let's move on.
How
So
much school feeding?
yeah, it's 120. Okay.
120, yeah. And fertilizer will be subsidies.
Okay. Fertilizer will be subsidies. So let's bring the subsidies here. Okay. So we have the fertilizer subsidies. It's not easy. Fertilizer
40,000.
40,000. Please don't go and do this question as a first question on. Before they will say you have spent 1 hour gone, you are already frustrated, you don't know what to do. I don't know what you are going. So at least it should be your last or your fourth question if you don't have any other thing to do. Okay. So it should be a question that will be on it. And mostly just do the workings. Okay, the workings will give you more ticks than the figures that you are bringing there. So, and don't even bother to bring all the figures. Look at the goods and services. It's going to be plenty. How will you be using 3 minutes to punch calculator to get a figure that will give you only 1 tick? No. Just leave it like that. Maybe those ones that are not plenty, like the tax revenue, those ones, we can put them, add them, go and put it there. The consumption for fiscal capital is not going to be plenty for you. Add them and go and put them there. Okay, but those that are going to be plenty, very plenty, don't waste your time to add. Just leave it and move on. Okay, so let's have the subsidies, fertilizers. That is 290. And subsidies for utilities is 60. And no, school feeding
Fertilizer is 40.
40. Okay.
Utilities is 290. Fuel is
Okay.
60.
So utilities is what?
Utilities is 290.
Okay. Utilities subsidies. So 290. And
It's left 10.
okay. Fuel is what?
60,000.
60,000.
Okay. Fuel is 60,000. Okay. So we have let's move on to the next one.
It's interest.
Okay. So the interest, what we'll do is that we can just bring those ones now. Okay. So you bring the interest together. So we can now have the interest expense. Okay. So we have the domestic what? Debt interest. How much is it?
800,000.
800,000.
Okay, this thing is for Ghana. Okay, no problem. The external what?
External is 1.1 million and 40.
No, it's for Ghana, so it's understandable. Okay. External debt interest. 1 million.
1,040,000. 1040.
So 1040,000. Okay. So what is going to happen there? The next one is what?
Liabilities.
Okay. But you can see that they have domestic debt borrowed and the external debt borrowed, isn't it?
Yes.
Okay, these are the money borrowed from this year. So since they adding borrow to it, it means that this happened during this year. So you go to financing activities, you can separate them or you can put them together. So but let's separate them for financing activities. So we go to financing activities and we have our domestic debts borrowed. Domestic debt borrowed for this year. That will give us how much? Mm-hmm.
2,850.
Okay.
2,850.
Okay. So it is 2.8.
2,850,000.
So let's count to the external one borrowed. What is the external one? The amount for the external one?
4.2 million. So 4,200,000.
Okay. These are all going to be what? Inflows. They are going to be additions. The money are coming to our what? Our receipt and payment account. So it's coming to the consolidated fund. So that will be an inflow. Okay. Loan and advances granted. Loan and advances what? granted. It will go to
Financing. Financing.
Are you sure?
Administrative, goods and services.
No. This is an asset, but it will be
Through granted.
Investing activities.
This is to employees. Okay.
Which one is to the employees? The loans and advances granted.
Yeah.
So how did you know it's for employees?
Yeah.
How is it for employees?
Oh, they can give you they can give you loan and advances, isn't it? And
But it hasn't been indicated or
no. Whenever they give you loan and advances, please, it's an asset. Okay. It's not a liability.
yes, but we know it's an asset, but you're saying it's for employees. That's what.
So the government they cannot grant loans to the government and to still be an asset to the government.
Okay, you don't seem to understand.
Okay. The government cannot give grant to the government and it still be an asset to the government. Or these loan and advances, they can give a salary advance. Okay, you can write for it, they'll give you salary advance. They can also give you those staff loan that they have been giving to you. Okay, so they can give, this is a consolidated fund. It can be given to a member of parliament. It can be given to Minister of Finance. They are all employees of the state. Okay, so we are not talking
personal loan to individuals. Why not maybe institutions like government giving Cocoa Board a grant so that
it
they
can
repay
also
back?
be. It can also be. Okay, it can also be. So it can be to Cocoa Board and other ones. It can also be to institutions. It can also be to individuals. There is no problem with that.
Okay, so it's an asset.
Yes, please.
Current.
It depends on the duration, so it's always going to be non-current. Okay. It depends. Whenever you see that one, it's always going to be a non-current. Okay. So unless they are, so we have loans and advances.
This is investment activities, so.
Yes, please. It has been granted during this year, so it's an outflow, but it will still be part of our assets. Okay, we are doing statement of cash flow too, so it has been granted this year, so it will be going out of the consolidated fund. Okay. How much is it?
600,000.
Okay. 600,000. Okay. You have to go and do equity. Let's do equity investments. Okay. So I'll let you financial assets. So you have your financial assets here. And you have your loan and advances to be 600,000. 600,000. And let's move on. Another item will come there. What again? Repayment of
How do you treat that?
the loan
Under financial asset.
Yeah, it will come under the financial assets. Okay. Which will be a long-term asset. So we always put those assets that can be easily converted into cash, which will be the equity investments, the loans and advances. If they are long-term, we classify them to be the financial asset, which will be under non-current. Okay. But the receivable, since it is going to be within a short period of time, it will still be under current assets. But these particular advances are being granted within the year. It's money that is going out of the consolidated fund. That's why we are treating it as an outflow under the investing activities. Okay, because this is going to be giving interest. The government is going to be getting interest on some of these ones. So it's just like you are investing and you are getting a return on it. It's not a financing. We are not taking the loans from another party. We are giving the loans out, okay, which will give interest to the state. So it is seen as investing activities, but it has been granted for this year. That's why we are treating it as an outflow, but that will also be an asset to the state. Okay. And I hope you're okay now.
Yeah.
Okay. The repayment of external debt.
Outflow.
Outflow. Okay. So we have to go and do workings for our debt also. I'm sure there will be other items on the debt there. So, okay, we have to do workings for the debt now. Okay. So we come and do workings for the debt. Then let's come to these activities first. So that will be under what? Financing, isn't it?
Yeah.
Okay. So we have the repayment of external debt. How much is it? How much is that?
1.5.
1.5. That will be an outflow, 1.5 million.
Under financing.
Yes, please. Yes, please. Okay, let's go and do the debt. Let's go and do workings for the debt. Should we put all the debt together, or we should separate it as domestic and external?
Let's separate it.
We should separate it. Okay. So we have the external.
Okay, we can classify both under debt, so that under the debt we have domestic and external.
Okay. So let's just make all of them public debts. Okay.
Public, yeah.
Okay. So let's have public debts. Okay. So let's have the balance brought down. There's a question on the balance brought down there. There's a item on the balance brought down there. Okay. We have external debt at the beginning of the year. Okay. That is 1.2 million. Okay. We have 1.2 million as the balance brought down. Okay. 1.2 million. Then we now come to amount borrowed. Borrowing for the year. Okay. Can we put the two borrowing together? That is going to be increasing our what? Our debt again. So can we put the two borrowing together?
But senior, one is domestic, one is external, but the
Oh.
balance brought down is for external.
We are all doing public debt. So you can just
Okay, so public debt. Okay,
yeah,
okay.
So you can put the two together. Okay.
I'll give you 7050.
Okay. So the two is 7050. So 7050,000. Okay, 7,550,000. Okay, what is happening? We have paid some. Okay. There has been a repayment of some. So that will be reducing. Okay. There has been a repayment of some. So repayment of 1.5 million.
Five.
Okay. There might be a debt, there might be a situation where they might be forgiving. Maybe they look at the country and see that, no, people you are suffering, they might throw some of them away. So we'll be going and see. Okay, we have equity investments. Okay, the equity investment, since nothing has been said, it will be the equity investment at the beginning, or the existing equity investment. So you add that one to your financial assets. How much is that?
$400,000.
Okay,
400,000.
Okay, 400,000. Okay, so let's come to cash and cash equivalent.
Assets.
Okay, that'll be, so let's go. Maybe there might be additional transaction that is involving cash. So we can just, that cash and cash equivalent is the closing balance there. Okay, so let's come to our assets there and have current assets. The current asset, we can have cash and cash equivalents. Okay, that is always going to be the closing balance. Okay, so maybe we can have a transaction that has not been captured. That will be reducing the cash. Okay, we have the recovery of loans and advances.
Also go and reduce the loan featured in financing activity.
Okay, so we have the recovery. No, it will be investing activities.
Investing, sorry.
So that will be coming in. We are receiving some part of the loan. So that will be recovery of loans and advances. Okay, that's how much?
$420.
420. Okay, so we have 420. That will be money that is coming in, inflow. Okay, so you go to your financial assets, you now have the recovery you are receiving. So that will reduce your loans and the other one. Okay, so that will be 420. Okay. Okay, we have done the external debts, other expenses. We don't have to do anything. Accumulated fund, we go and do the workings for the accumulated fund also. So the trust fund,
Payables,
okay, payables will be
liabilities,
liability. So we have the payables here. So let's bring the payables here.
current.
Okay, so we have the payables. Okay, so that one too, there might be other items that we add to the payable. So if there's a need, we do workings for that. Trust fund. Trust fund is what?
Liabilities.
That is a liability. Okay.
So it's non-current, right?
Yeah, it will be a non-current. Okay. Unless they are saying that it should be it is going to be paid within a year. Okay. So let's come here and have the trust fund. It is plenty on trust fund and
Haven't we exhausted all?
so let's come to the trust fund over here. So we have the trust fund. We have the public debt also over here. So let's make it the public debt. So the public debt will bring the final figure here. But let's go to the footnotes now to take other issues there.
Have you put the other expenses there? 40,000.
Or if there's no other items, we just send
I
it
think
straight
it's
forward.
studying on its own too.
So we just send it straight forward. Okay, so we just check and see whether other expenses will be. If there's no other expenses, then we just send it there straight forward. Are you okay?
Sure.
Okay. So Auntie Patricia, you are now relieved.
Additional information. The government of Ghana applies the full accrual basis International Public Sector Accounting Standards (IPSAS) as the basis for preparing the 8th financial statements. B. During the year, the Parliament of Ghana approved a transfer of 5% of accrued total tax revenue to the District Assembly Common Fund.
Okay. So the amount that's supposed to be transferred is 5% of the total tax revenue. So we go and do our total tax revenue and find 5% of it, whether the government is still owing or they are paying in advance. So we treat any of them as a liability or as an expense, or it will be an addition to the grant or a subtraction to the grant. But we are here to determine the total tax revenue because there might be some taxes that are still in outstanding. So we have to calculate the total tax revenue, including the amount that has been received and also the amount that are still in arrears. So we hold on to this one for now and move on to the next one.
Domestic debt interest and external debt interest amounting to 250 million and 300 million respectively was due but not paid due to the financial constraints during the year.
Okay, these are what?
250 and 230.
Okay, 250 and 230. This is what?
Public debt.
Okay, but this is owings, isn't it?
Yeah.
Okay, so these are owings. It means that the interest
Okay.
paid are not the actual interest. So what we do is that we are going to be adding the outstanding interest, which will be 230,000 and 250,000. And this will be treated as payables. Okay, this will be treated as part of the payables. You can go and open workings for the payables. And what is the interest? What is the interest? Hey, so let me come to the outstanding figure over here, outstanding interest over here. If we put the two together, how much are we having?
480.
Okay. So we have 480,000. Okay. So let's now open small this thing for payables. Okay. So we add this one to the payables. So payables as per the statements. As per the statement, what is the value for the payables?
160.
Is how much?
160,000.
20,
160,000.
160.
160,000.
Okay. Then outstanding interest will now be payables. Okay. Please, if you are sending the interest to the cash flow, you send only the one that has been paid, because we are looking for cash items. So the outstanding one will not go to the cash flow. To the statement of financial performance as what? As a total interest that we have to pay for the year. Okay. So that is that for that particular one.
Please go to the payable. Let me see something.
Okay.
Okay, sir.
Okay. Okay. So let's come to okay. D.
D. It is the policy of government to provide for consumption of fixed assets to all non-financial assets acquired during the year and those already existing using the straight line method. PP 25%, infrastructure assets completed 20%.
Okay. So let's go to, I hope we have done the total that's supposed to be there. Okay. So let's come here. Let's have depreciation over here. Depreciation. We have the balance brought down. So let's go and pick their balances in the statement. What are their accumulated balances?
Hey, so you're done with goods and services. Shocking.
Another item will come down.
No, but today there is small.
Thursday you see it will be plenty. Accumulated depreciation for PP is what? 100. Okay. So we are preparing the assets.
Infrastructure 150.
Okay. So that will be 160. Okay. So we cannot calculate our charge for the year. Very simple. Okay. The charge for the year will be on the total value at the end of the year. Okay. They have completed some of them. So this will be 802,000. And this will be 1,100,000. Okay. So we just apply the percentage on these ones. So 25% on 802. They are charging this on cost basis, okay, on straight line basis. So 0.25 multiplied by 802,000. What are we getting?
200,500.
Okay, 200,500. That is a charge for the year. Let's come to this one. I'm sure it's 20%.
Yes.
Okay.
That will be 220.
Sometimes they will give you the time that this asset has been purchased. So you time a portion. Sometimes they can tell you that the state charges depreciation on time or on monthly basis. So they will give you the time that this one has been purchased. So you calculate it on timely basis. But the one that is the cost, it has been there at the beginning of the year. So you charge a full year consumption on that particular one. Okay. So, but this one, we don't have any information like that. So we charge a full year depreciation on that. That will give us how much?
220.
Okay. 220. Okay. So we leave this one for now and see if we are going to be having any other information. Then we now send this one to you. So I'm not sure there's any other issue relating to
historical cost, replacement cost, okay, invest.
okay. So let's total these ones and know the carrying value and send it to our. So this will be 300, 500. This will be 380,000. Okay, what will be the carrying value? So the carrying value, you can name this one A, you can name this one B. So the carrying value will be A minus B. So I'm having 500.
It's supposed to be 495. Oh, sorry, 802. Okay.
This one is what?
802 minus is it not 305?
It's 100,000.
300.
Okay.
It's 501.
501.
Okay. So what about the second one?
720,000.
Okay. So we can move on. We can now straightforward. We can move straightforward by sending the charge for the year. Okay, that will be 40. So let's come to the consumption of fixed capital. Okay. So let's come to consumption of fixed capital. So we can put notes here. Okay. You can put notes here. Okay. So the consumption of fixed capital can be maybe, we don't know. So if you are doing it in exam hall, you put a note 6 there, or you put 6 there. Anyhow, the work.
Note 8. Note 8.
Okay. Okay. So let's put the 8 there. That will give us how much? If we put the consumption together, the
425.
420.
For the year, right? 425.
Okay. 40. $420,500. Okay. So we are done with that one. We don't have to do any other things. Okay, so we are done with this one now. Let's send their balances to the statement of financial position as what? As the, so we bring the PP over here. So what will be the PP figure? That is 5,015,500. We have the infrastructure. We have the infrastructure. And that will be completed. Okay. We have work in progress and completed. That will be 720,000. Okay. So we can now move on to other issues. Okay. Auntie Patricia.
So E, salaries and other emoluments outstanding during the year amounted to 130,500,000, while that of utilities amounted to 150,888,000. No, while utilities amounted to 150,880,000. Additionally, 50,780,000 of rent paid during the year relates to 2020. During the end of the year, 150 million in form of court damages against the government was outstanding as at 31st December 2019.
Okay. So what we are going to be doing is that we have salaries and other emoluments outstanding. Okay. And we also have utilities outstanding. But we also have rent, a prepayment of rent. Okay. That is also going to be taken out. But what you do is that you need to know the amount that will go to the cash flow. The cash flow, we are talking about the actual cash that has been paid. Okay, so before we go and do this salary and other emoluments outstanding, what we have to do is that we have to determine the actual amount being paid for what? For the compensation for employees. Okay, so let's go to the amount paid for the compensation for employees. Let's determine the total cash paid first, so that we can take it to the cash flow before we bring in the non-cash items. Okay, so 405,000.
That'll be 1,038,000.
1,038,000. Okay, so we come to, this is the cash flow. We come to compensation for employees. That will be
1,038,000.
1,038,000. Okay, so we can now go and add the owings. The owings is a non-cash item. Okay, so we can now add the salaries and other emoluments outstanding. Okay, so the total amount is what?
It's 1.3.
Okay, that will be 130,500. Okay, so we have 130,500. This will be treated as payables, isn't it?
Yes.
So we can go to our payables there and have salaries outstanding. Okay, that will be 130. No, this is public debt. That is public debt. Okay, let me count it. Umbrella. Okay. Salaries outstanding. 130,500. Okay, let's go to, before you bring any owings over there, you need to know the actual cash that has been paid. Okay, let's count to what other utilities amounted to what? To 150,800 and those issues. Okay, before we go and factor in these ones, this is what a non-cash item. The rent, which is a prepayment, also we have already paid this amount. So before we factor these ones for the purpose of the statement of financial position, and this one also, what we do is that let's go and check the cash that we have. Yeah, let's look for the actual cash that has been spent on the goods and services before we bring in the non-cash items. Okay, so goods and services, what will be the cash?
1,270.
Okay, 1,270. So you bring the 1,270,000. That is the cash that has been paid. But for the purpose of the accrual basis, you are going to be bringing the owings and also the prepayment into this one. Okay, So we have the additionally, utility is 150, 150. So utilities will be,
880.
okay. So we have utilities outstanding, 150,880. Okay. Then let's go to, this will also be treated as payable. So let's send it to payables first. So utilities outstanding. So 150,880. Okay. 150,880. Let's go to the other one. Okay, additionally, 57,80,000 of rent paid during the year relate to what?
2020.
2020. So
Okay,
it's an advance
that
asset.
is prepayment. Okay, but this has already been paid, so it will be taken away from our cash. That is why we didn't do anything about that. So we come to our goods and services. We have rent prepayment. Rent prepayment is how much?
50.
Okay, 57,80. Okay, 57,80. Do you have any receivables from the statement?
No, but senior, I'm thinking, shouldn't it rather be treated as an asset rather than we treating it at the financial performance bit because it's already been paid?
No, we have paid, we have overpaid. So it means that
So
the
we
rent that
take
we
it out.
supposed to pay is not the amount paid. So it will be treated as prepayment at the same time, a reduction to what? To your expense.
Okay.
Okay. So
But you didn't put it in a bracket, sir.
it was not in bracket. Oh, sorry.
Yep.
Okay. So it's supposed to be a reduction. Then you bring it as receivables under your
Current asset.
output. So we have receivables here. If there are no other items, then we send that one as receivables. We have overpaid. So the rent expense should not be the amount paid. But if you go to cash flow, that is the amount that is going out of the what? The consolidated fund. So that would be the same amount because we use the cash basis for the cash flow. Okay. During the end of the year, 150,000 in form of court damages against the government was outstanding as at what? 31 December 2019. So this is also court expenses outstanding.
Liability.
Okay. That is that will be treated as a liability, and also it will be under which classification of the expenses?
It's a provision, so non-current.
It will be under payables, all right, but it is an expense, so it will be under what?
Other expenditure.
Other expenditure. Anything relating to court should be under other what? Expenditure. Judgment, debt, and all those things should be under other expenditure. So we have the what? 150,000. So we have 150,000 here. So we can come to other expenditure over here. First, we haven't done anything on it, so other expenditure. So as per the statement, we have other expenditure there.
Yeah, 40,000.
That was 40,000.
Yes.
So we have court, court expenses or damages. Okay, that will be 150,000. It's an expense for the year, but it has not been paid. But since we are using accrual basis, we recognize expenditure and revenue, whether it has been received or it has been paid. They have to be in the books as soon as they are relating to that particular year. Okay. The F.
Sir. Hello, sir.
Yes, please.
Please, so if there had been fines and fees in the question, it would also go under other expenses, right? Or goods
If
and
it will
services.
be,
If we would have had fines and fees in the question,
If
will it have gone at
the court one,
no, like fines and fees in general?
okay, that would be like the government, that would be a revenue to the government. So we send it to the non-tax revenue. Or if it is fines and fees, it's the government that is going to be receiving that one. Mostly if it is fines and fees, it's for the government. But if it's an expenditure, it will be under the other expenditure. Anything that is relating to the violation of the law should be for other expenditure. It's not relating to administration. All right. It's not something that we have to do to keep the administration running. Okay. All right. Yeah. F. Yeah.
As at 31st December 2019, corporate tax assessments amounting to 620,500,000 was still outstanding to be paid by corporate entities to government, whilst the total amount owed to government as at 31st December 2019 in respect of taxes on goods and services stood at 200,580,000. It is estimated that only 80% of the outstanding debt to government may be recovered.
Okay. So it means that the tax revenue and those ones are also having what? The
issues.
Okay, they're also having accrual. So what we do is that let's go and total them. Let's go and find their cash figure and send it to our statement, our cash flow statement before we come and do the adjustment with those ones. So 240,000 plus 100 plus 400. I'm having 740 based on a cash one.
Yes.
Is the tax gain 40,000 or 400,000?
Which one? It's 40,000.
It's 40,000.
It's 40.
So then it's supposed to be
380.
So it's sorry. Let me check again. So let's come to the capital gain and check and confirm that one again. Okay, it's 40. So it's supposed to be 380, isn't it?
380, yes.
So the cash received from the tax and those ones will be.
Please, so a minute. Please,
Yeah.
how did you get the 380? Because since I'm confused.
We just put this. These are the ones that are received in cash. Okay. So we have the corporate taxes. This is the cash that we received. The income taxes, this is the one that we receive in cash. The capital gain taxes is the ones that we receive in cash. So just put the cash one together. That is the one that we send to the cash flow. Okay, because we are only looking for the one that we have received in cash. Our cash has increased by this that we received in the cash. So 240,000 plus 100,000 plus the 40,000.
740, right?
No, 340.
No, it's the last one is 40,000. Okay, the last one is 40,000, not 400,000.
Oh, okay.
Okay, so that will be 3. Auntie, I hope you're okay. Okay, so let me bring the 380,000 over here as the cash revenue received. Let's count.
That's direct tax.
Yes, please. Let's count to the indirect tax too. The indirect tax too. Let's find the cash component before we bring the one that we are not going to be receiving.
1060.
Okay, 1060. So we have 1060,000. Okay, so let's now come and adjust the owings against it now. Okay, please, what are they saying? They are saying that only what?
80% is recoverable.
Okay, so just bring the 80%. You don't have to bring the full amount and do what? And do provision again. No. Okay, you can just net the 80% from this one for the purpose of you calculating the 5% on the total tax revenue. Just bring the 80%. But if you want to bring the full amount and go and have a provision in other expenditure, so there's no problem with that. They are going to be having the same effects. Okay, so you can just bring the outstanding net of what? Net of or the net outstanding amount, which will be 80% of those amounts. Okay. Okay. So, but if you want to bring the full amount and go and do provision for 20% too, there's no problem with that. But if you are calculating the 5%, the 5% will be calculated on the amount that you are estimating to receive, not the full amount, including the what? The provision for the debt. Okay. So the question is saying that corporate tax assessment amounting to this one was still outstanding to be paid by corporate entities to the government. Was the total amount owed to government as at 31 December 2019 in respect of taxes on goods and services stood at 205 2
2,580,000.
okay 200,580,000. Okay, it is estimated that only 80% of the outstanding debt to government may be what recovered. So let's just net it. Let's just net it of the
But senior, is it for both or is just for the the indirect ones?
outstanding debt. So any debt that is owing to the government. So both, 80% of both. Okay. So what you have to do is that you can decide to bring the full amount here. Okay, you can decide to bring the full amount. Then you make a provision for 20%. But to be at a safer side so that you can easily calculate your 5% of the district assembly common fund, just find 80% of this amount and send it to your direct tax, and also you have your corporate. Okay, this will be VAT. This will be VAT net of what? Provision. So how much are we going to be having? VAT net of provision. So how much are we going to be having for the VAT?
288. 288.
288. Okay.
That would be 0.8 by 360.
No. The VAT is 20. This one.
Okay, the amount there, sorry.
Okay. This is this amount.
205. Okay. 200.
We have 160,464.
Okay.
Yeah.
Okay. 160.
0464.
Okay.
So
160.
464.
Okay. Okay. Let's go to the direct tax. Okay. The corporate tax owings. Corporate tax owings net of provision. Okay. So you just find 80% of it and bring it there. So what will be the 80% of that amount?
Please, can we see the amount? That is 6,500. 496,400.
Okay. 496,400. Okay. 496,400. This will all be treated as what? They will be under the headings of what?
Receivables.
Receivables. Okay. So we can now have our
Senior,
receivables
please,
now. Yeah.
can you please explain the one under the indirect tax, please?
The
That
one.
one is not the VAT of the indirect tax.
Okay. That is they say the tax, the outstanding tax on goods and services. That is the VAT. Okay. We have 200 and what? 200,500,000. Okay. And they say that 20% will not be what? Will not be recovered. So we are likely to recover only what? 80%. So just find 80% on the figure there, which is the figure is here. Okay.
The 205,
Okay.
2,580,000.
580,000. So we find 80% on it.
Okay.
Okay. I hope you're okay now.
Yes, please.
Okay.
Thank you.
Our receivables will now be, so we have receivables, we have the corporate tax, we also have the rent, which is 5. There's an amount for the rent there. So the rent prepayment will also come here, 50.
780.
50780. So yeah, 50780. So the corporate tax owings is 49600, 496,400. Okay. The VAT owings, these are revenue. So there will be asset to the state. So we have 160,464. Okay. 464. Okay. Please, can we now find the total revenue for the two? And then we send it to those particular one, or there's any other item that is going to affect them.
Sir, please, there was an error.
Okay, that error is 2018. So it will be adjusted against the accumulated fund at the beginning of the year. So errors are treated retrospectively. Okay, so it will be treated against the opening balance for the accumulated fund at the beginning of this year. Okay. Okay, please, can we find the
first one,
okay? Let me bring this one over here.
876,400.
Other expenditure was 40,000. The one that was paid, 40,000, isn't it?
Yes.
Okay. But if you come to the other expenditure for the workings is what?
190.
Okay, that will be 190. So that will be the one that will go to the, let me just total all of these ones, then you just do the posting yourself. Okay. The first one is how much?
876,400.
876.
400.
Okay. 876,400. So statement of performance, we are going to be having direct tax to be made 2, 876,400. Okay. Can we have the indirect tax?
161,528. So those
122,464.
Please, can you mention one number, one for me?
122,464.
464. Okay. So let's go to okay. 122. Okay, 1220. Four, 6, 4. Please, can we now find our total tax revenue?
Two
2096.
464. 864.
20.
96864.
Okay. So let's now look at the transfer to the DCF. Transfer to the DACF. It is 5% of the total what? Tax revenue. Okay. So the total tax revenue is 1. If you put the two together,
2096864.
2096
864.
864. Okay, how much are we supposed to get?
1048432.
104.
843,200.
Okay. 10484.
3,200.
Okay. So we are keeping 30, so it should be 84. Okay, this will be 43.2. Okay, that should be the figure. But let's look at the transfer that was made. What was the transfer?
$100,000.
So there is an owings of what?
To be bro.
I'm having 4843.2.
$4843.2. Okay.
Okay, but let's look at the cash amount that has been transferred to them first. What is the cash? The cash that has been transferred in relation to the grant expenditure. 100,000 plus 40,000 plus 80,000. I'm getting 220. Okay, 220.
Senior, please, can you explain the District Assembly Common Fund?
Is it the figure that we
Where
are
from the
putting there? Okay.
The 5%.
During the year, the Parliament of Ghana approved a transfer of 5% of accrued total tax revenue to the District
Please,
Assembly.
that's not what.
Is that?
Oh, okay. 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 Okay.
Okay.
Absolutely. All right. Thank you, sir. I didn't see it as specific.
All right, thank you. All right. So, sorry. So our expenditure over here, the grant supposed to be, the cash that was paid was 220,000 for the expenditure. So we have 220,000 here. Other expenditure was, no, other expenditure over here should be 190. This is the statement of financial performance. And other expenditure over here should be 40 rather. Okay. Can we add the non-tax revenue?
To the transfers.
No, the non-tax revenue, the total figure. There was no other issues relating to the non-tax revenue.
Okay, yeah. Non-tax revenue is about 280. 280.
Okay. So 280, that will be the cash at the same time. So we have 280 here. That is the cash received. At the same time, that is will be the revenue for this one too. Non-tax will be 4. We have the 280. Can we put our grant and donation together?
That is 300.
Okay. That will be 300,000. Okay. That will be the figure for cash flow at the same time. So we have 300,000. This is the cash one. So we come to the grant for the grants revenue over here will be 500,000. Okay. So let's just total the figures and we bring them. Let's bring goods and services will be what? Okay. Goods and services will be the total will be what? Okay, goods and services, we have inventory. We have inventory to adjust. Okay. So we have inventory there to adjust. So 50,780. Okay. Can we do the compensation for employees? The total for the compensation for employees.
We are on it. We are coming.
Okay.
That's 1,168,500,
Okay. Let me just adjust
including the
everything.
outstanding.
Okay. Let me just adjust everything so that the figures, the addition will not be anything. Okay. Let's count to in the year corporate tax revenue was overstated by.
Jane, in the year 2018, corporate tax revenue was understated by 280 million Ghana cedis. This error was not identified and corrected.
Okay. So the corporate tax revenue was overstated. If revenue is understated, what will be the impact on the profit?
It will increase profits.
Decreases.
It will decrease the what?
Profit.
Okay. So we are going to be having an accumulated fund here, and we do the adjustment to the accumulated fund. So the accumulated fund, we have the balance go down. That will be the balance go down. That will be okay. We have 3 zeros here. Let's go to the statement and pick our accumulated
3.3
3.3. That is credit, isn't it?
credits.
Okay, that is positive.
Yes.
Okay. So 333. 33,000. Okay, 3,200,000. So the zero is supposed to be. So we have 33,000. Okay, what will be the impact of what? Of the understatement on our previous year's profits? The profit was reduced, isn't it?
Yes, so you added.
So we now add the understatement over here. A statement of corporate tax revenue. Corporate tax. So this will now be, how much is that?
280 million.
Okay.
The 280,000.
Okay, that will be 280,000. So this, our profit was initially reduced, so we have to come and add. Please, there is no corresponding entry for this one because they have to keep this one in a suspense account because it's an error that is going to be affecting the agreement or the trial balance. So since it's not a trial balance, it means that you only come and do this particular one, that is all. Okay. So if it should be a trial balance, they will tell you where the error, the figure for the error is being kept so that you can go and net that one and also do the double entry. But this is an error that is going to affect the agreement or the trial balance. So this particular balance should be kept in a suspense account. So since you are not given a suspense account in relation to the statement, it means that you only pass the single side of it. That is all. Okay. Let me look at the last one. The last one, which is about, okay. Inventory included in use of goods and services available at the end of the year was as follows. Okay. So the inventory that we purchased, some of them are for use, some of them are for sale. Okay. So inventory for use to be valued at a lower of what? Inventory for
Replacement cost.
lower of cost or replacement cost, isn't it?
Replacement cost, yes.
Yeah.
Okay. Which of them is lower here?
Historical cost is lower.
Okay, so inventory for use will be 50. What about inventory for sale
Net realizable.
or the historical cost? Which one is lower here?
Still 50. Okay.
Net
For
realizable
sale,
value. Okay. So the total is what? The total inventory is 90,000, isn't it?
yeah. You said the lower.
Yeah.
This
Can
for
you-
the
can you
sale
go
is
over this
replacement cost too.
Okay.
The-
It's only net realizable in that cost. Okay.
Yeah, for sale is net realizable value and historical cost. For use
Yeah.
is replacement cost and the historical cost. So we pick the 40 against the what? The 60.
And then 50.
Okay. So the two give us 90,000. So it means that the inventory that has been purchased, 90,000 has not been used. So we go and subtract that one for the goods and services. So we come over here. You have
Sir, please go over again, please. Please go over again here.
okay. I'm saying that if you have the inventory that is for use, it means that you're not going to be selling it. So you are not going to realize any value from it. So we use the replacement cost and the historical cost. Inventory that is not going to be for sale, mostly stationaries. Okay, they are not for sale. We are going to be using it. So if it is for sale, you are going to sell it and have a value from it. So you have the historical cost and the net realizable value. But inventory that is for use, it is between the historical cost and the replacement cost.
Placement.
Okay, so if you come over here, the historical cost is 50, the replacement cost is what? 60. So it means that the historical cost is
Historical is lower.
we pick the 50. Okay. Inventory that is for sale, you are going to be receiving amount
Net
from
realizable and historical.
net realizable and what? Historical. So
Historical.
over here, net realizable
Net realizable.
is lower. So we pick this one, add the two, you are having 90,000 for the total inventory. Are you okay now? Okay. So we have that this will be closing inventory. It means that the inventory that we have over there, all of them has not been used. So what is a portion that has been used? So we purchased 310, but we are not able to use 90. So it means that we are able to use only 220. You go to your statement of financial position, you have your current assets.
Closing inventory.
So you have inventories over here
Current assets.
as 90,000. Okay. So the rest has to do with addition and subtraction. Okay. Okay, please. You have to know that for cash flow, we bring only in the cash items. So before you adjust, they can give you cash flow and what? Statement of financial performance. Statement of financial performance will be sending both cash items and what? Non-cash items, whether you have paid or you have not paid or. For cash flow, you send only the cash portion. So before you adjust with the accruals or the prepayment, find the cash portion to send to the statement of cash flow first before you adjust. Okay. So you can find your grant over here, your total social benefits also over here, and the other ones has to do with addition and subtraction. Please, any question? Okay. So let me save this one for you so that you can be able to do this. Please.
Can you go over where you pose a consumption of fixed capital?
Consumption of fixed capital will be only statement of financial performance because it's a non-cash item. So it will not come to the cash flow.
So you added the two figures and send it somewhere.
Statement of financial performance. Okay. 420,500. All right, please, we have done our best, and I hope that by the grace of God, our best will take us through. Go there, don't depend too much on information. Just prepare, learn what you're supposed to learn. You can only do your best and leave the rest to God. So please, we are ending it over here for today, but we'll still be talking and we are all alive, so we'll still be talking till we are no more. Thank you all for coming. I want to say,
Senior, I sent you a direct message. Hope you saw it.
yeah, I'll do that. All right.
Okay. Yeah, thank you.
So thank you all for coming. I will see you guys
All
and
right, thank you very much.
enjoy yourself. All right.
Thank you.
Thank you, sir.
All right.